Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the CBO. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of LikeFolio. Today, taking a look at Alphabet Google ahead of its earnings. Those come after the bell today. So you've got a few charts to get into, Landon, for your look across the sector and how Google or Alphabet Google compares to others. The one I want to get into first, because cloud, I know, is what investors are going to be looking to hear more from. What are you seeing in terms of cloud, especially as it compares to competitors like AWS or Azure?
Yeah, so AWS is by far and away the leader of the space. I mean, they're the early leader and everyone's using them. But Google Cloud is starting to, make a dent actually. And so when we look at the chart of web visits to this, you can think of this chart as sort of, how many people are going to consider signing up. It's not usage, so don't confuse that. So this is more showing that Google Cloud is becoming an alternative in people's minds to AWS. And cloud revenue last quarter was up 32%. AWS was up 17%. So they're still growing. Everyone's growing. Cloud compute is growing across the board. But Google is starting to take a little bit more of a bite out of AWS. It's growing much faster, but that's because the denominator is much smaller, right? AWS is massive. So Google as a percentage is growing faster because it was much smaller last year. But Meta just signed a $10 billion contract with Google Cloud, and this is a growing opportunity for them that they're obviously taking advantage of. It's always funny to think of Google as like not the leader in something, but they're definitely not the leader in this. But they are coming for AWS, and they're growing. And now it's not just if you need this solution, if you need cloud computing. It used to be, well, you get an AWS account, you set that up, and now it's like shopping around a little bit. Maybe it's AWS, maybe it's Azure, maybe it's Google Cloud. So overall, they're moving along in the right direction, and they're growing very well in this space. Now, when you look at the other two sectors of their business, you got search and you got stream. And if search is probably the one that I'm most concerned with. I'm bullish on Google long term, but search is a little bit concerning just because of how AI can disrupt this. Now, they've done a good job of getting the AI overview into search results, but when you compare transactional searches of Google versus ChatGPT, which is what we're showing here, you can see it's small. Yes, it is a very small number that ChatGPT is in on. I think it's about 5% versus 90% for Google. But it is growing, and it's obviously they're eating away at Google. Now, again, Google's done a good job with the AI overview, where if you search for something, it gives you that quick snippet up top, which should alleviate some of the flight away from Google into ChatGPT, where you just want an answer. But ChatGPT is now starting to get into recommending products and making it so you can buy. So that's on their list of to do. And I think as people get more confident and better results, more confident in their searches and better results from things like GPT or others, then Google could start to see a little bit of a drift away. Now, that's how Google won the search battle. I mean, they took out Yahoo, they took out all the others, if you can remember them, Ask Jeeves and whatnot. Dogpile, I think, was one. They became the winner because of better search results. And so they're going to have to continue to deliver better search results. I think that's the only threat I see, but they've got quite a runway with the lead that they have.
So, Landon, the three biggest areas that you're talking about, right? Search, YouTube, and cloud, they are making headways in cloud. But all you had to know is when AWS had an outage, a week or so, a week and a half ago, the impact of that outage shows you how massive AWS is and the lead that they have. Growth numbers are great. Even Oracle Cloud is growing, right, at big numbers. But are they catching? Are they starting to really make a dent? I mean, YouTube, they are the number one streamer. Your data in the past has shown us that. Search, yeah, there's risk there only because they are so dominant in that area. What are the risks, Landon? Do you guys see risks anywhere? They seem to be competing or doing extremely well in all these big areas. Is advertising a risk? The pace, the spending, if the economy's slowing, is that a problem? Because that could risk some of their revenue. Where are you seeing any problems? Because almost everything I see in your data here, it's all positive, Landon.
Yeah, it is. It's generally very positive, and yeah, the risk one is search, and then and then you show the chart, and it's what 95 to 5, and that's the risk, right? Is that 5 is going to catch up. I think obviously Google's aware of that risk. They know that they have to get better search results. That's how they won, and that's how they're going to lose if they lose. But I think that they're aware of that. They've got a little bit of a timeline, but that is the main risk I see right now, because the cloud platform is catching up. And going to streaming, it's unbelievable the lead that they have. I mean, everyone thinks of Netflix as the streamer, but they have 2 times the viewership that Netflix does, and it's just continuing to grow. You can see that the red line is YouTube, the white or the light blue line is Netflix, and so it's an incredible difference between these two. That YouTube and YouTube TV and all of that is really taking over and doing a great job of competing on streaming. Their ad revenue is up 13% last quarter, and so they're continuing to grow that. Fantastic investment, and it's just a dominant space. And so I think that within streaming, they have a very solid position. I think that's probably their firmest. I think that search obviously is that one's rock solid, but there is a potential down the road that they don't execute, and AI, be it GPT, Grok, Perplexity, one of them does a better job of giving you what you want. Because right now, when you search on Google, if you don't do the AI overview, you got 3 things of sponsored ads, and then you get down to the first page, you don't always find what you're looking for. And so that can be a problem for users, whereas AI generally gets you what you want right away. And then, of course, like we said with cloud, they're smaller, but they're growing very quickly. And, just like you said, I think the market needs it. I mean, AWS, when they went down, everything was struggling. Apps and websites all over, services were down. So I love a little bit of competition here, and I like to see where Google's doing. The only thing I don't like about Google here is the price. I mean, we are bullish on it, and our earnings score is plus 47. But it's, I like to buy when the stock is selling off, not when it's hitting all-time highs the day of. So it's tough, but I think this is one of those cases where you buy high and sell higher, invest in a great company that's winning in 3 categories, winning or on its way to winning in 3 categories. And so, yeah, Google is a buy from us. But to answer your question, search is the biggest risk, but their runway, their lead is so large, they got time to figure it out, and they're already showing us that they're aware. They're putting that AI overview on every page, so it's not a blind spot for them, and so they've got the lead. I think they'll do a good job of defending it.
Okay, hey, Landon, last thing. You're right. This stock has rallied incredibly, but a lot of that, as you know, was part of the regulation that kind of eased up and it took some risk out. I mean, you look at the PE ratios of the different companies in the Mag 7, and Google Alphabet this morning is a 29, much higher than it's been in the past. I mean, the stock in the last 6 months is up 71%, but a 29 PE on a Mag 7 name, that is not the highest, right? They're still relatively cheap. So if they come out with good news, if they continue to, move along on their path, dominating all the areas that they're in, from a valuation standpoint, if they're expensive or if they go down, and I understand your concerns about Google Alphabet just because how far it's run. Right now, it's overbought. What else, Landon, I guess, to wrap up this discussion, what concerns you, and what do they have to do to hold this level on a 70% in 6-month rally?
Yeah, I mean, it seems like the breadth is so narrow, and it's all the money's flowing into just a few names, and they got rid of the worries about the antitrust. There was a recent lawsuit that went their way with Chrome being the default search engine. I think that if you fast forward maybe 1 to 2 years, if that chart that we showed where Google is 90 to 95% of the transactional volume searches and AI is 5, if that is 70-30 or 60-40, then Google lost. And then that is a very bad sign for them. So I think that they've got to do a better job of making sure that they deliver what the users want. That's really key. So this chart, if that trend continues, the top line, that's Google. If that continues going down, the bottom line, that's GPT. If that continues going up, and you can add GPT, again, Perplexity, Grok, all the others, put them in there. If those lines continue and they start to meet towards the middle, then Google as a valuation at 29 PE is lost. That's a bad bet. But again, I'm betting on them to take care of this problem and start delivering better results and maybe find more creative ways rather than just pure click ads and sponsorships at the very top of search results, because I think people are kind of aware that, hey, I want to know ABC and you're giving me XYZ because someone paid you to show me that. Show me ABC. I want to know what I asked for. And I think that is the next sort of evolution of search. And AI has jumped to the front of the line, giving people what they want, and Google's still stuck in that sort of conflict of interest. Well, as Google, I know what you searched for, but this guy over here is paying me, so I want you to look at this. And that doesn't fly anymore. So I think that they've got to solve that problem. I do think they will, but I believe that is the biggest risk. Other than, like you said, it's just really expensive. I mean, 29 PE among all those 7 stocks does not look that bad. It's not ridiculous. But it is, all-time highs. It's run like crazy. But, in this economy, technology scales so well that I think that PE is going to, if this trades flat, the PE is going to continue to drop because their revenue and their income is going to continue to go up because they're going to be so much more efficient with economies of scale and technology, AI, all the investments that they're doing. They're spending $85 billion on technology, so they're going to make that work for them. And over time, I think that PE is going to defend itself. But yeah, to answer your question, search is the biggest potential problem, but I think they're going to defend it well.
Okay, we will certainly see what they say when they report results later today, especially about AI and search. Of course, we'll hear what's coming next on the cloud front. That's Landon Swan, co-founder of LikeFolio, with the latest look across data. Now, for the trading perspective on all things